Well, hello and welcome to Women of Color, Money and Legacy, where I talk money matters. I share strategies to empower us to become financially literate in terms of managing our money wisely, making important financial decisions, building generational wealth, and creating a lasting legacy. It's a journey of learning and growing together. And I want to start by welcoming all of the new subscribers. I am delighted to have you join the family. I hope that you are getting value out of the content that I share here on this channel. Now, do me a favor and click the like button. It helps the channel to grow. And if you enjoy the video, please subscribe to the channel and let's get started. Now, in my last video, I talked about the three economic indicators: the labor market, the stock market, and the housing market, and the impact that high inflation has created for consumers in these markets. And while we're already in a soft recession, the Fed has made it plain that it will continue to inflict as much pain as it takes to get inflation under control. So we can and should be anticipating a deep recession over the course of the next year. And no one knows for certainty when the recession is going to deepen, but judging from the impact of high inflation and these rising interest rates on these three markets so far, it should not be a far stretch to project that we are in for a hard road ahead. Now, that being said, this is an opportunity of a lifetime for you to build generational wealth by investing in the stock market. And that's what I want to talk to you about today. Do not miss this life-changing money moment. The stock market has been in an official bear territory for several months now. Sure, we've seen a few rallies, but nothing sustainable. And if you're not careful, these rallies could be bear traps, making you believe that the market is bottomed out and is turning around. So you start investing heavily in stocks only to learn that it was only a temporary rally, when in fact it could be months before the market is anywhere near bottoming out. Now, when it comes to the stock market, there are two types of markets. There's a bull market and a bear market. A bull market occurs when stocks are on the rise and you're making money. But it's not the best time to invest because the price of stocks is increasing. Ideally, you want to buy low and sell high so that you're making profit off of your initial investment. So the best time to invest is in this bear market. And a bear market occurs when stocks fall for a period of time. And this is the time that you want to go shopping, when companies are on sale at bargain prices. Inevitably, the stock market is going to go on a bull run again. And on average, bear markets take about 13 months to go from peak high to bottoming out, and 27 months to get back to break even. And this has been the cycle since World War II. The stock market is like a roller coaster. It goes up and it goes down. When the stock market goes down, I don't have to panic. It's just the paper loss. I'll get it back as long as I don't panic and sell. The stock market is going to recover and go back on another bull run. I just have to be patient. I don't want you to miss this moment because this just might be one of the largest transfers of wealth that you'll experience. A lot of investors are selling off and getting out of the market right now because of fear of losing their money as the stock market continues to drop. But I've said it time and time again, the stock market is a 230-year-old investment brokerage and been through numerous crashes and has always rallied and even exceeded previous highs. When it comes to the stock market, when there's blood in the streets, the more you should eat. Buy the fear and sell the greed. In other words, be greedy when others are fearful and be fearful when others are greedy. Don't miss this moment. If you are a new investor for the first time, you are sitting in the catbird seat by starting to invest in this bear market, while some of the more experienced investors are having to dollar cost average down to better their positions. Whether you're new to the market or not, this is our moment to build wealth and cement our legacy. Now, a few months ago, I posted a $5 a day challenge video on how to build generational wealth by investing $5 a day. Now, I'm going to revisit this investment challenge and give you some additional stock options. Now, I actually invest $10 a day, and once we officially entered into this bear market, I made some adjustments. I bought some more stocks and sold a few to balance out my portfolio. Today, I want to give you some stocks in which I'm currently investing. Now, you might consider these stocks for your $5 a day challenge or your long-term trades. Of course, you don't have to invest in any of these companies. You might prefer different companies, and that's good. Just make sure you perform your due diligence before investing in any stocks. And when you're doing your research, here are 4 things that I want you to take into consideration before buying a stock or investing in a stock. Number 1 is PE ratio. The price earnings ratio tells investors how much a company is worth. A high PE ratio might mean the stock is overvalued, and a low PE ratio might mean the stock is undervalued. A safe PEO ratio is in the range of 20 to 25. You typically want to steer away from companies with negative PE ratios because it might mean the company is losing money or they're in debt, okay? The next consideration is volume. Volume measures the shares being traded in a stock or the stock activity. You want to invest in stocks that are high in volume. High volume stocks typically trade at a volume of 500,000 or more shares per day. Now, the next consideration is market capitalization or market cap. And market cap refers to the total value of all of a company's shares of stock. Now, my recommendation would be investing in companies with at least $1 billion market cap, but there are exceptions if other considerations are lining up. And the 4th consideration is stock rankings. There are market people out there whose only job is to analyze stocks, and they provide forecasts based upon track record and performances. Take a look at their reviews and how they rank each stock on whether you should buy, sell, or hold, okay? So let me give you a list of 11 stocks that I'm currently investing in for you to consider for your $5 a day challenge or your short-term trading portfolio. Of course, they all meet the 4 requirements that I just gave you. The first stock on my list is Vanguard, ticker symbol VTI. Number 2, Invesco Trust, symbol QQQ. Number 3, Boeing, symbol BA. Number 4, Disney, symbol DIS. Number 5, Morgan Stanley, symbol MS. Number 6 is Apple, symbol AAPL. Number 8 is Microsoft, symbol MSFT. Number 8 is Tesla, symbol TSLA. Number 9, Google, symbol GOOG. Number 10, Amazon, symbol AMZN. And number 11 is NVIDIA, symbol NVDA. And these are mostly blue chip companies, some of which have been around for more than or at least close to a century, such as Boeing, Disney, and Morgan Stanley, and some tech companies that have been around since the 70s, such as Apple and Microsoft. So these are stable companies and ETFs that have proven stable enough to stand the test of time. And let me just give you an overview of our $5 a day challenge that I shared with you a few months ago. As I have always stressed, the primary vehicle for building wealth is the stock market. And we need to invest more in the stock market, and the sooner the better. Now, it's not a now or never, but bear markets don't come along every day. And given the current conditions, there couldn't be a greater opportunity to build wealth. You're never too young or you're never too old to invest. Now, naturally, if you're over 55, your investment strategy would not be the same as someone, say, who is 40 years old or younger, because you don't have as much time. When you're young investing, you can be more aggressive because you have lots more time to recover from losses. In either case, the key is to be strategic, and that's what this video is about. So let's deep dive into the stock market. The best way to start investing in the stock market is to set up an online brokerage account and trading platform. And there are a number of them out there. And I actually posted a video not too long ago comparing trading platforms with advantages and disadvantages. And I'll put that link in the description box below of this video. Now, I'm currently enrolled in 4 different online platforms. Each have a different purpose. But the main 2 platforms that I use are Fidelity for my $10 day challenge and TD Ameritrade for short-term investing, say up to 2 years. Whether in a bull market or a bear market like we're experiencing now, it's not uncommon for stocks to become volatile on just a short-term basis, say a few days or a couple of weeks. A few factors that will affect the stock market and cause it to fluctuate are, number one, company-related factors. If the company had a bad quarter financially, it's going to affect the stock price. The second thing that can cause stocks to fluctuate are interest rates. And we're experiencing this right now. With the current inflation, we've seen interest rates increase, which has created investor fear and created volatility in the stock market. The third thing is politics. Midterm elections are coming up here in the States in the next 5 weeks. When there's a change in administration or a bill being passed or overturned, it will usually cause fluctuations in the stock market. The fourth thing is current events. The war in Ukraine caused oil prices to spike. And then, of course, any announcement from the feds will affect the stock market. And the fifth thing is acts of God. And we see this right now with Hurricane Ian recently hitting Florida, Hurricane Fiona hitting Puerto Rico. These devastating natural calamities can affect the stock market. So just keep that in mind as you invest in the stock market, because timing is everything. You want to buy on those red days when the market is down. And don't forget cryptocurrency. The crypto market runs parallel with the stock market. When the stock market dips, crypto typically dips as well. Right now, we're in crypto winter, and just like the stock market, this is the best time for you to position yourself to make life-changing money. And quite frankly, your biggest and fastest gains will probably come in the crypto market. And there will be a shakeout at some point in the crypto market as it becomes regulated. So you want to invest smart. And for starters, I recommend stable projects and coins like Bitcoin, Ethereum, Polygon, ADA, and Solana. And stay away from meme coins like Shiba Inu. Now, I have a little Shiba, but I'm not going to buy any more. Okay? Now, this is not the time to go all in on stocks or crypto, but ease your way in by buying each time there is a dip and accumulate over time. I would not recommend dumping all of your money in at once, because I don't believe that we've hit bottom yet. In fact, I know that we haven't. Okay? Now, let me just say, I am not a financial advisor. I'm only sharing information about what I'm doing. These are stocks that I'm invested in only for your consideration. So please perform your own research and due diligence, or seek a financial advisor. Now, that's going to wrap up all that I want to share today. I hope this information has been of value to you, and I will return next week with another video on mastering your money. Don't forget to like, share, comment, and subscribe to the channel. Click on that notification bell to receive an alert each time I upload a new video. Take care, and I'll talk to you soon.